The economic boom and bust cycle is over. That's according to BlackRock. Yes, these cycles have plagued society for millennia, but we now have mega forces, AI, crypto. They say these will create a perpetual state of growth. Believe it if you want, but let's at least entertain the alternative view that booms and busts are here to stay. If you know financial history, you know that long bull markets bring with them assertions that these business cycles have been conquered. The famous examples, Irving Fisher's permanently high plateau, that was 1929. We had all the new economy talk just before the dot-com crash. Then in '07, it was financial technology that was going to save the day. That was just before the banks crashed. Could 2025 be another example of this misplaced optimism? Let's look at a few things that say probably. Item number one, investment grade credit spreads, tightest in nearly 3 decades. Item number two, high yield spreads, narrowest since 2007. These are multi-decade extremes. They not only signal overconfidence, they date back to 2 of those prior new economy booms. In hindsight, we now know, of course, that both, in fact, signaled the start of an economic bust. In fact, if we take that high yield spread, we plot it against the S&P, we see some pretty close alignment with the tops, right? Now, understand what you're looking at here. Blue line is the inverted spread between junk and treasury. So the tops are narrow spreads. Investors are essentially buying junk in lieu of treasuries because they're so confident about the economy. November 12th this year, the spread fell to 2.53, narrowest since May 2007. Again, it's possible that the boom and bust cycle is over. It's also possible that we're simply at the top of another boom. And just as before, everyone believes that the cycle is over. You can decide for yourself which is more likely. I do want to show one more chart I put together that potentially bears on this discussion. In the past, we have noticed that financial turmoil, it tends to begin in Europe for whatever reason and then spread to the United States. Best example is the FTSE 100, peaked before the Dow in '87, again in 2000, again in 2007. I only mention this because it's possible that Europe's credit markets are signaling similar trouble. I looked at 6 European sectors. We got energy, tech, healthcare, industrials, utilities, materials. Bond spreads have begun to widen dramatically. We're at 2.5-year highs across the board. Energy in particular, spreads reached a 4.5-year high recently. I can't say there's a definitive connection here, but due to its history of signaling trouble, we are watching Europe closely. Either way, boom and bust cycles, they're driven by waves of optimism and pessimism. We're clearly in a powerful wave of optimism, which ironically is the very thing that generates the view that the bust will never come. That's essentially our take here. We'll see what the new year brings. If you're serious about navigating this market, the links in the description will take you to our full services. Thanks for watching.